Every time I look at the financial news these days, it's always about two things. One, inflation is killing our spending power. And two, the Fed keeps raising interest rates to control for inflation, but that's already dropped the market 20%. And experts are saying it could drop another 20% before this whole thing is over. It's already down 2% just today. That makes investing really scary right now. But it's also not ideal to keep all our money in cash because inflation is just eating away at the value of that cash by 6 to 7% per year. So, what the heck do we do? Luckily for me, and also for you guys, Adam right here is Mr. Super Nerd who just loves researching economics and also is shockingly calm under pressure.
I don't know how calm I am today. Nobody likes to watch $20,000 of your hard-earned wealth just evaporate into the ether. But in truth, I do really subscribe to two bits of folk wisdom that work well in life and in investing. One of those is every crisis is an opportunity. And the other is when prices are going up, be on the side of the sellers, not the buyers or the borrowers. Those two pieces of wisdom have helped us a lot, both in terms of our own personal spending, which we'll talk about later, but also in terms of knowing what to invest in, when to invest, and why. So what does it mean to be on the side of the sellers? Well, what it doesn't mean is buying into companies that are hugely over-leveraged, have tons of debt, and aren't making very much money right now, i.e. Teladoc, which has just gotten absolutely hammered in the markets, and for good reason. Instead, we want to be invested in financially stable companies that create commodities or well-known products and have the power to raise their prices whenever they want to, and people will still need or want to buy their products. In terms of specific companies, I've done very well by owning Freeport-McMoRan. That's a commodities company that mines copper, gold, and molybdenum. Do you know what molybdenum is?
The heck is molybdenum?
I don't know, but apparently it's very valuable.
Why does everyone know about molybdenum except for me?
Molybdenum is the thing.
Oh.
Anyway, that company has obviously done very well with inflation. They're able to raise their prices. And the one thing is, if we do tip into recession, sometimes commodities companies don't do so well. So I'm thinking of selling some of those shares fairly soon. Generally, we don't invest too often in single companies because you never know. The CEO might get busted for cocaine possession or something.
Wow. What kind of companies have you been investing in?
He might turn out to be Sam Bankman-Fried. You don't know.
Oh, no.
So what we do instead is we invest in SCHD. That's a Schwab Dividend ETF. And the primary companies in that ETF are things like Home Depot, Coca-Cola, Pepsi.
Yeah, like I don't see Coca-Cola addicts just being like, nah, I'm not going to buy my Coca-Cola today because it's like $1 more expensive, right?
Exactly.
Yeah.
Pfizer. If you need your Viagra, you need your Viagra.
Yes, you do.
They can just keep jacking the price on that up. Jacking up might not be the right phrase, but you know what I mean.
This just got taken to a whole other level.
That was wholly inappropriate. The point being, we like companies that can raise their prices. SCHD owns a lot of those companies. And so that's our primary vehicle for fighting inflation. It's done very well over the last 18 months, and we expect it to continue doing pretty well. It has beaten even VTI, the kind of total index fund, over the last 10 years. So it's something that can perform well in almost any environment, but particularly in inflationary environments, we like it.
What I really love about dividend stocks is that even when the market is going down, we are still making money from our dividends that we can then use to invest in the stocks at basically a discounted price. So I really don't have to worry quite as much about the ups and the downs of the market because essentially I'm getting a good sale, and I love a good sale.
That actually brings me to the next point, which is every crisis is an opportunity. And when stocks are getting absolutely hammered, sometimes it's great just to look for one that's really getting crushed that has potential for the future. The one I'm looking at right now is Coinbase. That has gotten crushed because of the whole crypto crisis, thanks to Sam Bankman-Fried and others. And it's gone down about 80%. I think there's potential for it in the future. So that's kind of a speculative stock that I'm invested in. But as we said before, mostly we don't do single stocks. And the ETF that I really like right now is foreign stocks. They've gotten hammered thanks to Putin's shenanigans and various other things going on in Europe and Asia. And so those stocks relative to US stocks are pretty cheap right now. So we invest in VXUS, which is just the whole world stock market basically outside the US. And that's something that we've been buying a lot of recently. It looks relatively cheap versus US stocks. And hopefully 5 or 6 years from now, that one is going to be looking like a stellar investment. Another thing I like about VXUS is that foreign stocks generally return higher dividends than US stocks. And so if we do tip into recession, which appears increasingly likely, that's going to be providing us a really nice, solid income from those shares that we can then again use to buy more shares as they decline. So dividends are very comforting, I think, to us in this kind of environment.
Okay, but my question is, what about the people who just hate losing money? Even if it's just temporarily with the stock market going down, it just stresses them out. I'm kind of this type of person. We also have this neighbor, Sophie, who has somehow just figured out that Adam knows things and has like started gravitating to him with all of her questions. What about poor Sophie?
Actually, okay, Sophie's a really good example because Sophie, I've convinced just buy some bonds. The great thing about inflation is that the Fed raises the interest rates on treasury bonds to combat inflation. And so they're now over 4% for the first time in, I think, about 15 years.
Yeah, it's wild.
Yeah. Now you wouldn't want to be invested in just bonds forever because, they generally really underperform the stock market. But for the short term, especially if we tip into recession, bonds could be a great investment. Not only would you earn 4% per year on the bonds, but if we do go into recession and the Fed then cuts interest rates and they go back down to, let's say, 2%, those bonds will become increasingly valuable.
So does that mean we would hang on to the bonds still even after the recession?
Not us, no. We
Yeah.
want to be invested in stocks as much as we can, so this would be a temporary measure for us. We would be investing in the bonds with the idea that they would probably go up as interest rates went back down. And then we would cash those in, and then we would buy stocks when stocks were low. That's our plan with buying bonds. Otherwise, we don't really mess with them because we have a longer term investment horizon and we're not that interested in bonds.
Yeah.
But for the short term, if you're really worried about recession, which I think we are a little bit, some bonds can be a very nice way to hedge the portfolio.
So that is our investment strategy to combat inflation. Number one, be on the side of the sellers by investing in dividend stocks with companies that have high pricing power. Number two, consider investing in bonds to just give yourself a little bit more stability, especially right now with interest rates being so high, and even more so if the Fed raises the interest rates even higher. And number three, be ready to seize opportunities in foreign stocks and growth stocks if they continue to crash even further.
That was really well said.
Thank you.
Wow, you're so eloquent. You should just give financial advice.
Well, that's what I'm trying to do here.
I want to add that the same advice that we just gave for investing goes even more so for personal budgeting and spending.
So true.
Do not be a buyer during inflation.
Yeah.
Be a seller. A perfect example of this is what we did because we were able to capitalize on the massive, insane rise in prices for used cars by getting rid of our two older luxury gas guzzlers and trading them in and instead getting a brand new economy car that gets great gas mileage. Didn't cost us a thing because of the money we got back from the used cars. And now we're saving something like $15,000 or $16,000 a year on gas, insurance, and maintenance costs every year. And you know where that money's going? Straight into the market.
That is so true. We've also done the same thing with all of the crazy, insane food prices that are out there right now. Everyone's talking about my grocery bills have gotten so high, right?
Yes.
Eggs right now in Los Angeles can go for upwards of $7.
It was $7 the other day.
I know, right?
Down at Gelson's.
And we eat eggs every day. At least we did before this crazy inflation. We just say, you know what? Nope. We are not being buyers. So instead, we just learned how to make some tofu scrambles It's getting the job done.
I actually kind of like the tofu scramble.
You do?
Yes, a little bit of olive oil, brown that tofu up, put some nice spices in there. Maybe I only like it because I'm just like saying F you to the egg prices,
Yeah.
but it is a pretty satisfying breakfast.
Your justified tofu scramble.
Yes.
The last thing to consider is that inflation is the perfect opportunity to earn more. That could mean something like taking on a new side hustle in a job that's now paying more because of wage inflation. It could also mean just raising rates on work you're already doing. You guys should see what Adam is doing, raising his rates over here.
Oh, well, the work is worth the fee.
He's worth it in his mind.
But yes, I have raised my rates almost 50% over the last year. I hadn't raised them for a while, but inflation is the perfect opportunity to do that. So as you can see, all of this advice about what to do during inflationary times really fits pretty well with our overall philosophy. Earn more, spend less, invest the difference. And you know where all that investment is going.
Straight into the best market opportunities we can find so we can retire early and adventure the world full time.
Let's go.